Okay, morning guys. Welcome back to today's sharing. Okay, as usual, we'll get started in the minute. I'll just quickly introduce what we're gonna do today. Okay, every day we're gonna do the first portion here is we're gonna walk through and recap some of the trades we talked about yesterday. If we are in, then what we're gonna do is we're gonna talk about it, how we manage it, what's the outcome of it. Okay, and if those trades are not in, likely what we're going to do is we're going to cancel those pending orders and we'll reanalyze the market based on the most recent development. Okay, and to seek out for opportunities that we can participate for the day. Okay, so let's get started for today. Yesterday we had two trades, right? The euro dollar and the pound dollar. So we are in both of this. Okay, we do see price has came back up, did a retracement, and entered on the trade on the price that we wanted to enter. Okay, so this is on euro dollar. It's still running more or less kind of like close to the price, the entry price that we went in. Okay, so nothing much for this trade. I'm just gonna leave it. Okay, very similar to pound dollar here. We do see price came back up, and we are in this trade right now as well. Okay, nothing much to do on this trade, nothing much to manage. We're just gonna leave it and see how it goes. Okay, very quickly, since these are the only two trades, right? We'll start off with the analysis. Okay, and I'll walk you through the thought process on euro dollar first. Okay, which to me it's, you just need to give it a bit of time, right? And there are some minor details here that might favor our current trade. Okay, again, that stacks up the probability. It's never going to be 100%, but that helps to increase the chances, right? Now, if I go to the 30-minute time frame, you can see that right now, at least for now, we are actually building up a potential double top. Okay, of course, it's not completed, which means price can naturally still go higher, and then this double top doesn't exist, right? But as of now, what I'm seeing here is there's a potential of this double top. Okay, and this double top here is not just any double top, but we are in that zone, right? Yesterday we talked about this zone. We do have that FIB 618 50% region as well. Okay, so that's something to add on to that. We do have the H3 camarilla today over here. Okay, and we do see a little bit of divergence. Okay, not the most obvious one, but you do see over here. Okay, the H1 is a little bit more obvious. You can see the divergence over here. Okay, so this is something that you want to take note of as well. Okay, it's not going to be 100% sure that this trade is going to be a winning trade, but all this add up to the probability. Okay, and since we are here, I would like to talk and introduce to you, right, quickly what is hidden divergence. Some of you who perhaps are a little bit more familiar with the concept of divergence might hear of it before. Okay, so if you take a look, right, this high here, okay, this high here and this high here. Okay, you look at it and you realize that, okay, price is coming down, right? It's actually forming a lower high. But if I were to use a trend line, right, and you can see over here from the RSI indicator, we did make a higher high. Okay, so this is also what we call a divergence because the two direction is not in line. Okay, but this divergence is called hidden divergence because it's a little bit more tricky. I would say it's not as obvious as your regular divergence. The hidden divergence here is a little bit difficult to identify for traders who are perhaps a little bit new towards this concept. Okay, but the idea of hidden divergence is a trend following kind of like analysis. Okay, regular divergence is to spot for reversal. Hidden divergence is to spot for trend continuation. Okay, so the principle here is quite easy to understand in a way that you can see your momentum, your RSI is overbought, right? So you can see while price is coming up, it hasn't break this high and it's already overbought, which means there's a possibility that this is going to reverse. Okay, and that's why it's called a trend following. Okay, but having said all this, right, it doesn't mean that this trade here is going to be sure win, right? It's just all this are adding up, so I'm very comfortable to leave my trade here running for today. And of course, the target here is still the same. Okay, nothing much has changed. Basically, yeah, I'm just gonna leave this trade here running. Okay, the other one here is our pound dollar. Okay, so if you see what's happening right now is, of course, price is coming up. Okay, price has been retracing. You know, it's more like a V-shaped formation. Okay, and we are right now in the territory here. Okay, which is where the 618 comes in, right? So this is like the double top 618. Whether this trade is gonna play out, we need to, you know, just leave it to the market and see. Okay, on the lower time frame, we do have a divergence. Okay, you do see prices going higher. Okay, but at the same time, your RSI here doesn't print a new high. Okay, again, this kind of divergence indicate that there's a possibility that price is gonna reverse. It's never gonna be 100%, but that's the idea. All right, so this is another trade that we're in. I think just a quick update. There's no new trades, of course, because we're already in it. Just wanted to share with you the update view on it. Okay, is there a possibility that price can actually hit our stops and from there reverse? Yes, right. Yesterday we did talk about how the conservative stop loss is above this high. Okay, but for me, I usually like to put it around the 786, a little bit more aggressive to increase my risk to reward ratio. Okay, so do take note of that possibility as well. Okay, other than that, there's really nothing much to analyze here. I think this trade here is still valid. We're just gonna keep it and see how it goes tomorrow, right? Okay, now let's take a look at some of the newer pairs that we are still not in. Okay, and is if there's still an opportunity. Okay, let's take a look at the Aussie dollar. Okay, so Aussie dollar here yesterday, we did mention that we are in a range environment, right? So from this high here to this low here, there isn't really much of a lower low, lower high, or higher high, higher low. We are in a range, okay? And usually in a range, we utilize the strategy or the methodology called harmonic patterns, okay? And right now, I'm seeing that there's a potential pattern forming, okay? This over here, okay, let me just adjust the chart a little bit. Need to bring in some tools to show you. Okay, this is what we call a bad pattern. Okay, so you can see how this retracement actually came back towards around the 50 and trade too. Okay, so that's the first condition for a bat, and then after that, what we expect here is for price to go up, and the completion of the bat is somewhere at the 88.6. Okay, so let me complete that drawing. Okay, so this is how it looks like. Of course, the stop is going to go above. The target here, there are a few ways to set it. Okay, now if you ask me, from where we are right now to the top here for the completion of the pattern is about 70 plus pips. Okay, understanding the movement of Aussie dollar, right, the average daily range, I doubt this is going to be completed by today, so there's no need for us to put in an order if we are looking to trade this. Okay, so this one setup, right, a bad pattern. If you're looking to trade this, you do not need to rush in and put in your panic order now, because unlikely it's going to complete today, right? The average daily range for Aussie dollar is about 50 plus pips. So the distance here to there is about 70 plus. It's not likely going to complete today. Okay, but there is another setup here that I'd like to share with you. Okay, let me bring in that too as well. Okay, I'll need to probably make some adjustment very quickly. That's fine. Okay, just use this too. All right, another setup that I'd like to share with you is what we call an ABCD pattern. Okay, and the principle here is very simple, right? The idea is that A to B, okay, is equivalent to C to D. So that's like equal move, okay? And in harmonic pattern, we call it a harmonic move, right? It's basically 1:1, is an equal leg. And I simply use the Fibonacci here to be a little bit more precise instead of like just drawing this line. Okay, you can see this is where the 100% is. That's your 1:1. Okay, and this is where we say the ABCD happens. Okay, usually when this happens here, some traders draw it like that. We expect kind of like a reversal, okay, or at least a short-term retracement from there. Okay, so this is a potential trade that we can consider today. Okay, ABCD pattern. And what you do observe over here, okay, there's a lot of tools that I'm bringing in right now. Okay, there is some confluence over here at this region as well. Okay, between the 1:1 and of course our H5 level over here. Okay, if I were to extend all the way to the left, this is a little bit far-fetched. Okay, but you do see kind of like a little bit of reaction on this zone, right? So you can consider this. Right, for me, how to trade this, okay? So if you're looking to execute this ABCD, right, your entry will be somewhere around that 100 or 1:1, which is somewhere around 7750, right? The price is 0.7750. Your stops has to go above that 1618. Okay, so that is about 40 pips. Okay, it's still pretty decent. In terms of target here, of course, there are a few ways to set it based on harmonic patterns, the ABCD setup. Okay, what we usually do is we take in the retracement from the low to where we enter, and then the first target is at trade 2, the second target is at 618. Okay, the risk reward is about 1:1 for the trade 2 if you look to target there. But for me, I like to use the camarilla pivot levels as well. So if you ask me, right, based on this trade setup, looking at a 4-hour, there's a possibility that this can still come back down, but obviously this is in a range. So I'll be more than happy to perhaps set it based on like the L3 level. Okay, slightly more than 1:1. The minimum target I'll put is at the H3 level. That is a minimum of 1:1 risk to reward. Okay, for me, an intraday setup, I need at least a 1:1 risk to reward. If not, I will not take that trade. Okay, so over here, I will extend my target towards the L3 camarilla for today. There are some key levels here for you to take note of as well. Of course, a confluence to that, right? So if I put in that fit, that's actually around the 786. Yeah, okay, so that's around the 786. Something that I will do is based on this. Okay, so quickly over here, I'll take the screenshot. Okay, and I'll put it into that PowerPoint. Right, so I'll update this. This is our Aussie dollar. We are taking it on the, okay, obviously this is a range. Okay, we are taking a sell limit at the level of 7750. Okay, I'll front run it a little bit, right? You realize that the price here is 7752. Usually I need to round up a little bit or round down a little bit to, you know, just make the number easier psychologically. Okay, that it's not like something magical, it's just something that I prefer. Okay, the stop here is gonna go 7795. 0.7795, so that's about 45 pip, right? Okay, so as an intraday, still pretty okay. Is it 45 pips is fine. Okay, the target here is 7690. Okay, so I'll update this image. This is Aussie dollar. Right. That looks fine. Okay, so do take note of this. Let me put that in, right? So the entry order is 7750. Okay, the stops is at 7795. And the target here is 7680. Okay, so this is how it looks like. Okay, so we are adding on to this trade. Okay, next up we have the New Zealand dollar. Oh, okay. So both are very similar, right? So my immediate reaction over here, you can see okay, is that of course Aussie and New Zealand, they are quite correlated, and you do see that there's this similar pattern setting up. Okay, ABCD, and taking a quick glance at this, you do see that we are coming in somewhere here, right? So there's like confluence of support resistance as well. Let me do a very quick measurement based on Fib to be a little bit more precise on the ABCD. Okay, right, you can see where it comes in, quite near to it, like exactly there. And I still remember yesterday when we pulled this here, this is the Fib of trade 2. Okay, we talk about this, why I'm not interested in the trade 2. Okay, there's also the H5 camarilla for today. If you ask me between the New Zealand dollar and the Aussie dollar, right, I would slant my favor a little bit towards the New Zealand dollar, obviously. Okay, because there's a little bit more confluence. There's a camarilla, there's a 1:1, there's a trade 2, there's a previous structure that's very clean over here. Compared to Aussie dollar, you don't really have much of that, right? You only have perhaps the Fib, a little bit of like the retracement, okay, somewhere around that zone at 618, okay, and you do have this H5, okay. So both are valid, okay. I would say that you can take both, but at the same time, just need to manage your risk exposure. Okay, this is very important, which means that understanding that Aussie and New Zealand, they are correlated, right? You want to take note of the part where if both of this trade lose, there's a very high chance that both will lose, okay? And you're exposed at it 2 times. Okay, if you're taking this trade here based on the ABCD, then your stops is going to go above this, which is about 30 pips, pretty decent. Okay, target here, because of how the chart on New Zealand dollar is moving, right? You can see that we do have a trend environment. If this comes out here, technically you are trading the trend. Okay, so the target on New Zealand dollar will be a little bit more attractive than the Aussie for sure. Okay, I'll put it at the L5. Okay, that's very obvious. Okay, and you can see the risk reward is very, very attractive, right? And that is about 60 plus pip, right? It can be achieved like in 2 days. Okay, so if you ask me, would I take this trade? For sure. Okay, so I'll definitely take this trade. Okay, so let me screenshot this as well. Okay, and I'll put it in a PPT. Okay, this is on New Zealand dollar. Okay, the range is bearish. We are looking to sell it at 7145. Okay, and the stop here is about 7175. Okay, so that's a 30 pips, pretty decent. Okay, and the target here would be 7080, right? Okay, so this is how it looks like. Good. Let me put that in. Okay, this is gonna go in at 7145. Stops is 7175. Okay, and the target here is 7080. Okay, good. This is the second trade that we're looking out for. If you're following both of these ideas, again, reminder, take note of the risk exposure. Okay, next up, we have the dollar CAD. For the dollar CAD right now, is really not much developing. Okay, we talked about this yesterday as well. Why I wouldn't want to just pull in the Fib and then just take that level over there. That's not how the strategy works, right? So I'm going to leave this here. I think for today, there's really nothing much for us to really take a look at it. Okay, the closest pattern you're going to get is a bad pattern, and the completion is somewhere around here. I don't think we're gonna get it today anyway. Okay, so I'm just gonna leave this here. I think there's nothing much. Okay, next up, it's the dollar yen. Okay, you can see we are in a range environment. Okay, the high and the low hasn't been broken. We talk about this, why we are not interested in the sell pattern, but more towards if there's a buy, we'll be more interested to take a look at it. There's no buy setup for now, okay? The closest, let me do a very quick check on this pattern, right? It's not the nicest pattern of all. Okay, let me just do a very quick check and see if this is valid. Right. Oh, okay. It's not a valid pattern. Okay, so anyway, what I'm checking for those of you who are interested is I'm checking if we do have a cipher pattern. It does look something like this, right? Okay, but the course, this leg here has touched the 786. It's not a valid one. Okay, so anyway, I don't really like it. Okay, just wanted to see if there's a valid pattern setup. So for me, nothing much on the dollar yen as well. We just leave it. Okay, the trade that we had was a sell. It got tagged out already. Okay, so that was a profitable trade. We're just gonna leave it there. Last here is gold. If you take a look at the intraday time frame, really nothing. Okay, there's nothing here that's happening. You can see how price is just nothing you can really do about this. Okay, so yeah, really no trade here. I don't want to force anything. You might have a small mini pattern that might form today. I don't want to force that in. I think it's very ugly. Okay, it's not something that looks very nice. Yeah, usually the idea about harmonic pattern is that visually it needs to look nice. Okay, that's why the name harmonic, right? It should looks harmonious. Okay, so to me that's about it for today. Okay, so quick update, we do have 2 current trades running. We'll just leave it and see how it goes. Today we added in 2 others. Okay, so we added one on Aussie dollar, the other one is New Zealand dollar. The setup is more or less similar. Okay, it's an ABCD pattern, but hey, take note of the risk exposure. If you ask me, I would focus more on New Zealand. If you were to pick one, I think New Zealand will be a much better one to focus compared to Aussie. I'm putting in both, understanding the risk, the possibility that both might be losing at the same time. Good, right? So that's all for me today. Again, hope you guys are picking up something here and there. You don't need to pick up a lot of things every session. Just focus on picking up one thing, right? Then if every session you'll be able to pick up one thing, then you accumulate that. I think it'll benefit in your trading as well. Okay, so that's all for me. I'll see you guys tomorrow as usual, right? So I'll see you guys tomorrow, same timing at 10 a.m. Okay, bye-bye.